My friend, what don't you know now? You can invest, and you can trade on price differences. The path we are on is like a journey through history. How CFD trading started. It began with stocks, then banks took it further by developing ways to measure price movement using pips and to standardize trade sizes using lots. Now you understand how to count pips together with lots, and you know that lot size is what we use to execute trade positions. You also know that with the power of leverage, you can enter the market with very little capital, even as low as $10. Today, I want us to think about the bridge to the market, from the spot or real market to the CFD market, and that bridge is retail brokers. Retail forex brokers came into existence because technology and market structure changed, allowing ordinary people to access a market that was previously reserved only for banks. Before retail brokers, between the 1970s and 1990s, forex trading was only for big banks, central banks, large corporations, and hedge funds. Trades were done through phone calls and interbank networks like Reuters Dealing and EBS, and the minimum trade sizes were huge, millions of dollars. An ordinary person could not participate. When the internet started spreading in the mid-1990s, together with the development of the CFD system, everything began to change. Prices could now be delivered to people at home, orders could be sent electronically, and trading platforms became possible. This opened the door for a new type of business, retail brokers. The first generation of retail brokers started around 1996 to 2000. They introduced small accounts like mini accounts, micro accounts, and even deposits as low as $10. They also introduced high leverage such as 100 to 1, 200 to 1, 500 to 1, and even 1000 to 1, allowing ordinary people to trade what banks were trading. These early brokers built their own platforms, but they were slow, expensive, and hard to use. Some of the early pioneers included FXCM, founded in 1999, OANDA, founded in 1996, and IG Group, which added Forex in the early 2000s. Then came the big shift, the real game changer, when MetaTrader 4 launched in 2005 by MetaQuotes. This marked the end of in-house trading systems that were often slow and manipulative. With MT4, retail brokers exploded because the platform was cheap to run, easy to install, easy to manage. Traders allowed brokers to set spreads and could operate automatically. For traders, MT4 brought major advantages. It introduced charts like candlesticks and line charts, allowing you to track price movements and patterns. It provided indicators to help identify trends, market activity, and potential trade opportunities. It also introduced expert advisors, trading robots built using MQL4, where you could code your own strategy, set risk management, automate trade execution, and even run it on a VPS so it trades continuously without you being present. And most importantly, it was free to use. This changed everything. Within just a few years, hundreds of retail brokers appeared worldwide because MT4 made it easy to enter the industry. At the same time, liquidity providers made it easier for brokers to move away from dealing desk models. Brokers could now connect directly to banks, prime brokers, and ECN networks. This allowed them to offer tighter spreads, 24/5 trading, and access to many instruments. Because the system of pips and lots is universal, traders could now trade forex, gold, indices, oil, and even crypto, all from one platform. Now, anyone with as little as $10 could start trading, and retail trading became global, especially after the 2008 financial crisis when awareness increased, competition grew, regulations improved, and platforms like MetaTrader 4 and MetaTrader 5 continued to dominate alongside others like CTrader and DTrader. Today, retail brokers exist because technology made trading accessible, platforms reduced costs, liquidity providers handle large orders, and people want the ability to trade from home. Now you can see how far we have come. The system treats you like a professional trader. The only thing you needed was a bridge to the market, and that bridge is retail brokers. With platforms from MetaQuotes like MT4 and MT5, the field became smoother, replacing the old in-house systems that had high spreads, expensive commissions, slow execution, trade manipulation, and conflicts of interest. In the next lesson, we will look at the characteristics of a good broker, because as this field grows, so do scams. Stay tuned. And don't forget to like and subscribe.